What's up guys, it's Keith here. Today is September 24th, 2021, and in this video we'll be going over the previous bans of either crypto trading or mining or transactions in the realm of crypto in China. So it'll be a pretty good deep dive starting from 2013 all the way to where we currently are. So let's get right into it. The first news story is coming from December 5th, 2013, and this one's header is China bans banks from handling Bitcoin trade. So this particular time frame actually didn't have people prohibited from transacting cryptocurrencies as individuals, but it would be only affecting banks. We can see individuals are still free to trade Bitcoin, but should be aware of the risks, blah, 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 said the People's Bank of China. And the People's Bank of China, which are the watchdogs in the nation's IT ministry, are the ones that came out with the notice there on the around early December of 2013. And it actually came into action a little bit later in December. We see China's biggest Bitcoin exchange says Yuan deposits no longer accepted. We will be taking a look at BTC China. We can see the biggest Bitcoin exchange in China said Wednesday that it's no longer accepting Yuan deposits, dealing another setback to the virtual currency. And BTC China will be in another news story a little bit later in this video. And while we're going through the news stories, going through the time frame in the history, we'll be taking a look at the chart of Bitcoin periodically, just to kind of connect the time frames and the chart, because I'm sure a lot of people have a good understanding of where Bitcoin has been. Looking at BLX, the Bitfinex chart of Bitcoin USD is quite long as well. Stuff like newer exchanges aren't nearly good for long-term data, but BLX is your go-to if you're looking at a very long-term time frame, in my view. So during that time frame, middle and early December, we had just absolutely pumped, and it kind of made sense that it wasn't going to go on forever. Bitcoin does have cycles, but if you're just taking a look at this first data set from the news story posting to the price action soon after, we can clearly see that if you're just trying to connect the two, theoretically it would have made a massive impact, because that was the peak of the bull run before the bear market of 2014. So we're going to move on to the next one, and you can kind of see how it gets less impactful the longer we go in terms of the market cap increasing and the decentralization globally. So there is less of a centralized impact just on China. So we'll move on to the next story here. The next one is coming from September 4th of 2017. Bitcoin price drops 200% after a new ruling from Chinese regulators. And we can see that it was really just a news story banning ICOs, which are initial coin offerings. Somewhat similar to an IPO, an initial public offering, where you're providing basically fundraising for a company by issuing coins to the public, where the public is able to purchase those coins. And we can see the People's Bank of China says this practice, which has become popular around the world as well as in China, constitutes illegal fundraising. And that's really the main reason why they are banning ICOs from China. Not too long after, we see September 14th, China to close all Bitcoin exchanges by end September. So this is extremely impactful news. And BTC China, which came in a little bit earlier in our news stories, if you recall, which is China's largest cryptocurrency exchange, said it would stop all trading activity from September 30th. It was said in a decision that was based on September 4th, and we can see this is a tweet that I was able to dig up from 2017 from BTCC, which is the Bitcoin China exchange. After carefully considering an announcement published by Chinese regulators on September 4th, BTC China exchange will stop all trading on September 30th. And we can see that was the September of 2017. There was a lot of bull run left to go. We're kind of in a similar situation right now. We're getting deep into September. It's currently September 24th right now. And we could still climb quite a bit of ways. If we're extrapolating what happened in the previous bull run, we were sitting around the 5-ish K, just under 5K, 4,800 range for one BTC, and then we were able to rocket up to 20K, and that was like the major euphoric crazy time that a lot of people do recall if you were in that period in the cryptocurrency markets. So it gives you a bit of an understanding. It's 4x from 5K to 20K. So if you're looking at our previous all-time high of 65K, looking at a potential 200K or 220K BTC that we were calling really 250, 220, somewhere around there, isn't out of this world in terms of price appreciation, if you really think about it. So I think it's a really good representation of kind of where we are right now. It's making less of an impact in the overall market. Next thing we're going to be looking at is something a little bit more recent here, April 8th, 2019. China wants to ban Bitcoin mining. And the National Development and Reform Commission said on Monday it was seeking public opinions on a revisited list of industries it wants to encourage, restrict, or eliminate. The draft for the revised list added cryptocurrency mining, including that of Bitcoin, to more than 450 activities the NDRC said should be phased out as they did not adhere to relevant laws and regulations, were unsafe, wasted resources, or polluted the environment. And this was made to basically take place until May 7th. I believe China simply wants to reboot the crypto industry into one that they have oversight on, the same approach they took with the internet. I think this is very relevant, and I think it's pretty interesting to see. China is doing something similar to crypto market the same way they tried to control the internet. All these apps that you see, Snapchat, all of the Google products, Netflix, Twitter, Facebook products, including Instagram, SoundCloud, Spotify, Tumblr, all these applications and software that are used around the world are unavailable to Chinese citizens, and they have replacements for these. Companies have basically gone out and created something similar, for example, Amazon, and then there is Alibaba or AliExpress, depending on if you want like a lot of products or a single product. So you see these similar, not projects, but companies come to life in the different markets in the West versus just completely separate in China because the government does not allow it. So it is pretty interesting in terms of how to view it, because really what they're looking for is control. During this point, we saw BTC take a little bit of a bull run from a low of 3,200 and a break of around 4,200, 4,300. We saw it climb all the way to around 13K. Maybe a little bit past 13K, maybe just cusping the 14K range, but around mid 13Ks was where this push led us. So we see no real major correlation here. At this point, because Bitcoin is so decentralized, and we'll take a look in our next couple of series of news stories going over why it's even more decentralized at this point, because there was a massive exodus of miners. So this is the next story published in May of 2021. This is this year. I'm sure you're well aware if you are involved in crypto at all. There was a massive BTC mining exodus where Bitcoin basically cracked down on miners in China, and really what happened was a lot of individuals or a lot of companies had to leave, and we'll go into where they actually ended up a little bit later. And during this time frame, around May 18th of this year as well, they also banned financial payment institutions from cryptocurrency businesses. China has banned financial institutions and payment companies from providing services related to cryptocurrency transactions, and this is a Wall Street Journal post. Cryptocurrency companies are leaving China in the Great Mining Migration, and this was really recent here, just in August 22nd of 2021. And I found this really interesting article on Cointelegraph, which goes over where the actual miners ended up. Not going to go over exactly all the stats and everything, but we can see Bitcoin mining in China dropped 55% since the beginning of the year, as many Bitcoin network participants turned off their equipment. It was confirmed as China's secondary market filled with GPU cards, and miners were actively selling cards at below market prices. And these GPUs are needed in order to mine crypto, or BTC specifically, in the proof of work protocol there. And we can see China with 3/4 of all BTC used to be mined. And at this point, the percentage is a lot less, but we'll take a look at where they actually went to. The first place is Kazakhstan, because they also had a strong growth in its share. In terms of the world Bitcoin mining, it went from 1.4 to 8.6, a massive jump. And a couple of reasons why. One of the first reasons is it's a pretty easy move overall. You don't have to put all your equipment on a plane or a ship. You can either use a train or you could use a truck to transport it over land, because that's a lot cheaper. That's one really important thing. Another really important thing is it has very low cost of electricity. Electricity is the most costly thing when you're mining crypto, once you have all the mining equipment set up, really. That's all you're really doing, is just using electricity to mine, keep your computers running, validating the network, and that's the basic operation of a mining operation. You got to hire out people, you got to get real estate, all that stuff, but the main cost is going to be the electricity. So finding a location that has very low electricity is going to be a really impactful thing to increase the profit margins for your mining business. Another place that a lot of Chinese crypto miners went into was Russia. Russia also increased its share in global mining to 6.5%, as in the case for Kazakhstan. Russia also has a border with China, which is convenient when transporting mining equipment. So it's pretty interesting to see they are also going to Texas as well. That was the big hype, as a lot of people were talking about Texas absolutely booming because all these miners are coming in, and we didn't really see that play out too much. I didn't think that a ton were, but I'm sure there are a few that actually did end up going to Texas. I'm not exactly sure of the exact percentages, but we do see that transportation cost and electricity are two main factors when considering moving to a different location as a Chinese miner, obviously, and they chose a cheaper transportation cost because it just makes logical sense. And this is the BTC hash rate here down at the bottom, and it was the biggest drop ever in Bitcoin hash rate, which is a pretty significant statement. And it did correlate very well with the move to the downside, not because it was so much fun and uncertainty in the market. Yes, that has something to do with it, but in our view, it's mainly got to do with the fact that if you're selling, if you're moving to a different location, you're gonna have to sell some assets in order to pay for that. I'm sure they had to cut some ties off with the real estate that they were currently using. Maybe they didn't own it, they had to sell it. Whatever the case may be, they had to pay fees and transportation. It definitely costs money to transport an operation of that size from one location to another, especially different countries. So you're going to have to sell your assets, and they get paid in Bitcoin. So they're going to sell their Bitcoin and dump it into the market, and that's why you saw a big dip in the market. Didn't correlate perfectly with the overall hash rate, but it does make sense because they have to sell, and then there's just a lack of mining occurring, and that will reduce the hash rate, and that's why we saw such a significant move to the downside. And we are seeing a very solid recovery, so we are seeing those miners get turned back online, validating the network again in areas like Russia, Kazakhstan, potentially even Texas. So we are seeing things come back alive, which is really nice to see. In more recent news, September 24th, 2021, this just came out today. China widens ban on crypto transactions, and they're saying Bitcoin tumbles. Hasn't really dropped too far. And one of the key things here is China's central bank says crypto transactions are illegal. They're basically completely outright stating that it is illicit. So crypto-related transactions will be considered illicit financial activity, including services provided by offshore exchanges, the People Bank of China said on its website. It added that cryptocurrencies, including Bitcoin and Tether, are not fiat currencies and cannot be circulated. I would much rather have Bitcoin than a fiat currency. I don't know about Tether, some shady stuff going there, but we'll continue going on. Chinese officials are going further to stamp out crypto trading for its ties to fraud, money laundering, and excessive energy usage. Well, clearly they have never heard of proof of stake. Basically, most major projects that are altcoins are on a proof of stake protocol, so it's going to save a ton of energy, and yeah, they clearly got to learn a little bit more about the market. This is a little bit of an interesting story that came out because it is completely opposite to every single story that we've gone through thus far. China has given away millions in its digital yuan trials, and this is how it works. We're not really going to get into this, how it works really, but what they're trying to really do is control the market similar to how they control the internet, like we talked about kind of in the middle of the video there. And they're really creating a central bank digital currency that is ahead of really every single other country. In my personal view, some have already published their project basically, or actioned their project. I believe it was some country in the Dominican or Panama, I believe, one of those countries down there. But we do see China taking major steps in order to actually get this digital yuan, this central bank digital currency, to take place. And they're already testing it out, and they're investing millions of dollars into, or probably hundreds of millions of dollars with their research and all that stuff. But it is actually taking place, and I think it'll be inevitable. They're really the forefront at central bank digital currencies. So that's going to be the video. Hopefully you enjoyed it. It was a jam-packed video going over the timeline all the way from December 5th of 2013 all the way up until what we're doing, or what they're doing right now, in terms of banning all crypto-related transactions and really considering it an illicit financial activity. So we have seen the progression increase. Before it was just banks. People could still trade it, although they were highly against it. Then they started going after the exchanges, taking down China's largest exchange, which was BTC China. And then now they're basically just going out over the entire sector, really a blanket statement just saying, this is all banned, this is all illegal, it's all illicit financial activity, and they're probably going to be internally creating their own central bank digital currency that the people of China are able to use. So that's my take on it. I don't think it's really going to be impacting the market as much as many people think. There's some FUD, there's some uncertainty, but at the end of the day, because Bitcoin is more decentralized, it is causing less of an impact each time China bans Bitcoin, because we've seen it time and time again. They're very anti-crypto. They like centralized authority and control, and that's completely opposite of what crypto and Bitcoin is. So if you enjoyed the video, if you got something from it, give it a thumbs up. We do really appreciate it. If you would like more videos like this, please subscribe, and until next time, have a good one.